Twice a week here on the Market Day Report, we check in with Todd Horwitz with Bubba Trading, and Todd keeps a very sharp eye on what's going on with all of the markets, and one of those is the crude oil market, and I was interested to read your comments this morning after the weekend events, Todd, so let's set this up. We've got the October contract of crude oil up 639, 61.23. We're just off of the high here of 61.25, but boy, this has been a wild and volatile market. What's the latest you're hearing? What's your analysis?
Well, John, I think we want to compare the crude market to what happened with the Tyson farms and cattle. If we go back, right, there was a disruption in supply, and of course, you had a lot of panic, and we saw oil at one time overnight, it was up almost $9. Okay, we were almost at 64 overnight. Now, we're in this major backwardation pattern right now, which means that today's oil is $3 above February oil, which is an incorrect formation in general. So what we're seeing here is a lot of fear trade. It doesn't mean that it's going to be over tomorrow, but the supply disruption will be solved, it will be handled, and it's amazing how it came right in front of the Aramco IPO so they could get these prices a lot higher. But I think what you will see, now again, we could certainly go higher from here, and I wouldn't say we can't, because the fear could last a little bit longer than we think, but when it's done, you can look for oil, and I'm more convinced than ever that we will see the high 40s before year end, because this supply disruption will end, and of course the sellers will come in, and we're going to see that we can work without that extra oil right now because we've got plenty of supply anyways.
It's pretty interesting then. You kind of tied this to the events here of recently, just where we have these wild gyrations and swings. What about the VIX index? That's the fear index, and I know that you talked about that a lot.
The VIX is a little bit higher today, but I really think that the equity markets in general, okay, we're seeing a lot of fear trade. Bonds are much higher, which is more based on fear. The VIX is higher, the dollar is higher, so the fear assets are all much higher. However, we're really waiting on the Federal Reserve on Wednesday. The equity markets are extremely slow. In fact, the only market that has any real volume right now is the crude oil market. So I think the whole entire market structure is waiting to see what Jerome Powell is going to do on Wednesday with interest rates. Now, they basically priced in 50 basis points, but it wouldn't surprise me if they didn't make a cut. But on the other side of that coin is President Trump happens to be right that we could actually cut a full point from here if we wanted and still have money flowing into the bonds, but would lower our interest rates going forward because, again, the rest of the world is negative. So, again, that we're paying that interest. That's the United States Treasury bonds. So I think what you're going to see here is probably a 25 basis point cut, which may disappoint the street, which should bring in some volume and probably to the downside, which is why I think you're starting to see a higher VIX right now, is that kind of fear that's probably out there.
Fascinating stuff. Thank you very much for explaining that. I'm going to hold you on here through the break, and we'll come back in just a moment to talk about the livestock. First, I want to quote these futures. We're going to do that on the other side of this break as well, next here on the Market Day Report. All right, let's get right into the corn futures and see if they're responding also to what's going on with these other markets as well. The December corn up 4 1/4, 3.73, a penny under the high. The March is up 4 cents. A lot of those contracts 3 to 4 higher. November soybeans up 1 at 8.99 3/4. The January is up a penny at 9.13 1/4. December Chicago wheat up 5 3/4, 4.89 1/4, and the new crop in July is up 6 1/4 at 5.03 3/4. Let's look at live cattle now. This protein complex been a little bit weak here today. December fats are down 5 at 104.33. The February down 20. In the feeder cattle market today, that was kind of a mixed market earlier. It's mostly lower now with the October down 35, the November down 60 at 133.43. But the hog market is in expanded limits right now, or it can go as much as $4.50 either way. We're $1.77 lower on the October, 64.70. December down 28 at 68.42. So, Todd, what do you think of this protein complex over here today? A little bit of a pullback from what the end of the week was last week when we really surged going into the final day.
I think everything looks great, John. I mean, again, I think that the bottoms have put in both fats and feeders. Again, they can churn around here. I don't mind them. In fact, I would prefer that they kind of churn around these support levels. I think that brings the buyers in much faster, and I think it leads to a much bigger rally when it finally comes. I don't want to see these wild spikes like we're seeing in hogs right now. Now, hogs, I think, have actually shown a bottom, okay, and we're actually much higher. You know, we kept testing that 60 level, and last I looked, we were at about 64.50. And I think that, you know, even despite the wild range, we continue to make what we call higher lows, which is actually more bullish for this pattern, and I would expect to see higher prices. And of course, if a deal gets done with China, which I do not think it will, but if that happens, then they should go even higher, obviously, because they have right now a little bit of a shortage in hogs there. But of course, because of the tariffs and because of everything that's going on, they're being stubborn and don't want to buy them. But at the end of the day, I think that the complex itself, including the grains, all look really solid, and the action is actually very bullish based on what's going on.
What do you think stands in the way of getting a deal?
Well, I mean, again, I think that these are two guys fighting, and I think that Xi is going to try to wait out the election. But I think he might have learned something interesting during the debates, which is that even the left side of the aisle is not willing to start to cut back on these tariffs, because I think everybody realizes that the intellectual properties and the free trade have to be resolved. So I think that what they're finding out is that they may be forced to make a deal sooner than they want, because at this point, the United States holds all the trump cards, as they say.
Interesting. All right. Well, thank you very much for the analysis. Always great to talk to you. We'll talk to you again tomorrow. Todd Horwitz with Bubba Trading in Redwood, Illinois, from his office right there. Brand new information out from the USDA, and that is in the form of the cutouts here at midday. And we've already talked to some traders that said keep a sharp eye on these. The beef cutouts here at midday, they are on the mixed side. Choice up 98 cents. The selects down $2.65 with a 60 load movement. Then over in the pork cutouts, it's higher all the way across the board. But this time, Christina, the loins are leading the way higher at $3.96 higher. 72.24. The bellies up $1.65.
Seeing the loins above the bellies. You don't always see that. Thank you. Appreciate it, John.